Hello, ladies and gentlemen. Greg Mikulowski from ForexLive.com. This is the Kickstart video. Today's date is July 31st, last day of July. In the Kickstart video, I take a look at three of the major currency pairs: the euro versus US dollar, the dollar versus yen, and the sterling versus US dollar from a technical perspective. So let's get started. I'm going to start by taking a looking at the 4-hour chart. And when you look at this and the price action this week, we started up here. We came back down into this cluster of moving averages. This cluster of moving averages included the 100-day moving average. That's this blue line down here. The 200 bar moving average on the 4-hour chart. That's the green line right here. And the 200-day moving average. That's the other green line up here, the step green line. That area comes between 1.07936 and 1.08182. What we did on the moves to the downside was we did find support against the lower of those moving averages, more specifically the 100-day moving average. You can see it right here, on the previous day we did find support early against the 200. Bar moving average on the 4-hour chart. The 200-day moving average, we've seen the price trade above and below it, admittedly, in a up and down price momentum moves. But the key is on the downside. We couldn't get below the 100-day moving average, so it's obvious, that we got those reactionary moves to the upside. Now in trading here today, we did see the price move back above that 200-day moving average, but then rotate back to the downside. The key tell in the move back to the downside was the holding of the 50% retracement. That 50% retracement at 1.0806 was of this move up from this low right here, the June low to the July high. 50% again came in at 1.0806, and we saw the price rotate back to the upside. We're seeing increased move to the upside after the employment cost data came in weaker than expected. The dollar's getting hit, and that has moved the price back above the 38.2%, the broken 38.2% retracement, retracing most of the, we're starting to retrace a lot of the moves to the downside as so earlier today. So we are seeing that move higher. We do have the FOMC rate decision later on this afternoon, and with the lower employment cost data, maybe it tilts the Fed a little bit more to, being a little bit more demonstrative, perhaps, in the expectations going forward for the September cut. There is no change expected today. If they did, it would be quite a shock. But and the Fed is not about that. But what they say in the first three paragraphs of the statement and what Chair Powell says is going to go a long way to determining the dollar weakness or the dollar strength. So we are seeing dollar weakness here with the euro versus US dollar moving back above the 38.2% retracement. Stay above that level, or if we're able to stay above probably the 200-day moving average, then the 100 bar moving average on the 4-hour chart is the next key target at 1.08648. Let's take a quick look at the hourly chart while I have you. And the move to the upside has not only taken the price back above the 38.2% retracement, but also above the 100-hour moving average. Now, we've been above that 100-hour moving average earlier this week on Monday, and then last Friday and last Thursday as well. So that's nothing new. What would be new is a move above the 200-hour moving average. That's a green line in this chart. Level comes in at 1.08516. So pay attention to that. It may be another tell on the upside for this currency pair. So be aware, be prepared. Let's take a look at the dollar versus yen. We'll take a look at the 4-hour chart and what we saw after the Bank of Japan interest rate hike today. And the decrease in bond buying was a move to the downside here. The initial move did find support near the 200-day moving average. We saw a rotation back to the upside, but then a break below that 200-day moving average is now taking the price down to this swing area through here. Going back in time, you can see the number of different times that the price did find either support or resistance against this level through here and here and here and here and here and here too, and here. We fell below the level and then came back up to it, tried to move to the downside, couldn't, and then based against this and moved higher through here. So this was the start of it, but this up and down volatility through here is where the swing area came into play. So this area comes between 149.20 and 149.65. The low price today stalled ahead of that. Admittedly, the actual low price for the day came in at 149.77. So that was still about 13 pips short of that level, but these are big moves in the dollar yen these days. So be aware of that. We are seeing the bounce back above the 150 level, that key 150 level. That might be another level in play. Also in play is a 50% retracement. That's of the move up from the December low right here to the high price that we saw in the month of July. That 50% retracement comes in at 151.09. Watch that level for close buying and selling confidence, I guess. It level roughly corresponds with this area right through here where we found a nice floor. We did break below it one last time before moving to the upside through here. That often that happens is that you have that failed break coming into support against the 100-hour moving average, start to move higher. So 151.09 is going to be a key level, short-term level in trading here today. Be aware of that level on the downside. Watch 149.20 to 149.65. Finally, let's take a look at the sterling versus US dollar. We'll look at the 4-hour chart for this currency pair, and what we see in trading this week is lots of ups and downs. We do have the Bank of England rate decision tomorrow, which is a toss-up according to a lot of the economists. So that perhaps has the market hanging around, and the hanging around is occurring in between the this green line down here, which is this 200 bar moving average on the 4-hour chart at 127.97, and the blue line up here, which is the 100 bar moving average on the same 4-hour chart at 129.02. That about 105 pips separating the two, and we're kind of right back smack in the middle, maybe a little bit below the midpoint of that level. Trade above and below this broken trend line through here after trying to hold support against it right here in last week's trading. So that's not giving us any clues. This swing area right here did find support here and here. So that's somewhat important. That goes back in time through here. That level comes in between 128.16 and 128.27. And the 50% retracement of the last move to the upside here is also near that area at 128.28. We are currently trading at 128.44, so we are above that area, giving more of a bullish bias here for this pair. Watch the this high price going back to the month of early June, which came in at 128.599 or 128.60, let's call it. On the top side, get above that level and move toward the 38.2% retracement. So that's my Kickstart video where I take a look at 3 of the major currency pairs. From a technical perspective, we're seeing stocks move to the upside with the Dow Industrial Average now up 99 points in pre-market trading. The NASDAQ index is soaring despite Microsoft's unimpressive beat yesterday. And so the NASDAQ index is up, well, I can't see it here, but it's up over 300 points. S&P is up 69 points in pre-market trading. So strong start for the stocks ahead of their earnings and of things like Amazon, Apple, Meta over the next 2 days. Also the FOMC rate decision again at 2 p.m. We'll see how it all plays out. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.